Welcome back to the Hectare Trading Grain Market Update, where we brief you on this week's events and what's behind movements in the market. The Hectare Trading Midlands benchmark price for feed wheat is £174, up £2 from last week. Global wheat markets continue to be driven by shifting geopolitics and energy prices, while increasingly balanced by ample global supply. Prices came under pressure midweek as traders focused on signals that the Iran conflict could end sooner than expected, with Trump suggesting a resolution within weeks. Markets remain cautious. Prices have also experienced pressure as freight costs start to weigh. The USDA's prospective plantings report, published on Tuesday, gave support to wheat prices on the news that corn acreage is expected to decrease or stay the same in 37 of 48 states. Despite UK crops being in their best condition since 2023, the rising fertiliser costs cloud the harvest picture as farmers react. The London feed wheat May contract closed Thursday at approximately £175.10, up on the week. The new crop November contract closed at around £184.85. The Hectare Trading Midlands benchmark price for milling wheat is £187, up £2 from last week. The Paris milling wheat May contract has broadly tracked the feed wheat complex this week, caught between geopolitical risk premiums and the weight of plentiful global supply. The May contract closed Thursday at €202.50, recovering from the previous day's close of €201.25, but still down from Tuesday's close of €204.75. The Hectare Trading Midlands benchmark price for feed barley is £162, up £7 from last week. Supportive pressure on feed barley prices from generally stronger wheat prices has been balanced out by good growing conditions and successful drilling progress. Competitive bidding for old crop feed barley has been observed on Hectare Trading this week, with particular activity noted in the Yorkshire and the Humber region. The Hectare Trading Midlands benchmark price for OSR is £436, up £11 from last week. The ongoing conflict in Iran and near closure of the Strait of Hormuz has become the defining driver for the global oilseed complex this week. Soybean oil climbed sharply in Chicago as higher crude costs continued to boost the biofuel sector, while Indonesia announced it will push its biodiesel blending mandate to 50% from July, citing the need to mitigate energy supply disruptions caused by the conflict. The US EPA has also finalized strong renewable fuel blending standards for 2026 and 2027, reinforcing vegetable oil demand across the complex. The Paris rapeseed May contract has softened from the midweek highs, pulling back from Tuesday's peak of €515.75 to close Thursday at €505.75. Once you've signed up to Hectare Trading, you can access the latest market insights. By filtering on region, you can see our regional benchmark price estimates, our market analysis, the latest prices that have been offered to farmers, as well as market commentary, futures, and access to wider market news. That's all for this week. Don't forget to sign up to get the latest market insights and click subscribe to get the next update.